Here we are. So, our guest today on You've Got Mail is none other than my illustrious baby brother, David. Hey, David.
Hey, brother Mel.
Brother Dave from Toronto. So, we begin our show always with the jingle. And if I had Jacob, your son, it would be better, but you'll have to just bear with my clunkiness here. Are you ready for You've Got Mail?
Get a chair, grab a seat, or we'll sweep you off your feet. We groove, you got mail. Ease your legs, rest a while, all you gotta do is smile. We're swell, can't you tell you got mail? When the show begins, you better hold on her tight. Or before you know it, you'll be high as a kite. Take a break, settle down, we're the only show in town. It's our road, don't you know you got mail? Give it up, don't think twice. We're a hurricane on ice. What the hell? Give it yell, ring the bell, show and tell. Mademoiselle, give it smell. You got Mel. You've got Mel.
And Mel has brother Dave. So brother Dave, we lived together until you were 8 or almost 9. And I came to Israel, and even though I begged you to come with me, you stayed behind. How's it been the last 50 years?
It's been lonely without you.
So, usually we ask our guests just to get things running to tell the audience what their favorite Beatles song is. Do you have a favorite Beatles song?
Yeah, in fact, I do. And it is The Long and Winding Road.
Oh, wow. I didn't even know that. Can you sing a few bars?
The long and winding road that leads to your home.
Beautiful. I didn't even
Yeah,
know
well, it's a, I'm sure that if you asked 10 economists their favorite Beatles song, they'd probably say The Long and Winding Road, because that's the burden of the forecaster is.
I thought they would say Money Can't Buy Me Love.
Well, if you have a very poor track record, it might be Fool on the Hill.
So brother Dave, for people who don't know you, you're my baby brother, 9 years younger than me, and you've had a stellar career. You have been the chief economist and strategist for Merrill Lynch in North America, the first time a Canadian ever had that position.
Correct.
And then you were chief economist and strategist of Gluskin Sheff in Canada.
Correct again.
And now you've finally taken the plunge and become an entrepreneur. And you have your own company for like a couple of months, and it's usually successful. Tell us about that.
Well, first, it's been fantastic to actually take control of your own destiny. But, if you have the capacity financially and, you build up the track record in this particular profession, but maybe when it comes time to anything, it's just a different form of carpe diem, the opportunity to actually create something, which you've done in your own career. And so it's really for the first time that I've actually just taken control of my situation, not have to cater to a particular boss, not have to do anything that I think is trivial or unimportant, to be able to build a team and to really do what I'm passionate about 100% of the time, not 60%, not 80%, 100% of the time. So it's great not to be a company man anymore, to be able to call the shots, to build a team, and to make a difference for our clients, and produce something that's really unique, and really, and not attach it. Everywhere I've worked for companies that were selling product, and you have to ultimately always try and, you know, I'm not going to say toe the line, but you know, you're selling product in the end, and I don't have to sell product anymore. I don't have to attach asset management to my forecast. My forecast is my forecast. I'll tell you what the risks are around the forecast. I'll tell you about how I get from point A to point Z or Z, and basically try and guide you as an investor. And so now I can spend all my time just doing that in its various ways, and it's been a lot of fun. I mean, it's, you know, running a firm's got its headaches. There's roller coaster rides, but you know, people did say to me that I would be saying to myself, because I launched Rosenberg Research in early January, so it's been 7 months, and people said that I'd be saying to myself, why didn't I do this earlier? And they're right. I should have done it earlier, but the cup is half full in the sense that at least I did it before I lost my faculties, or at least I hope I haven't lost my faculties. But it's never too late. But it's been really enjoyable. I have a young team. I think the median age of my staff is like 30 years old. So
So David,
they're keeping me young. So that's really maybe the best part of this thing. I have this youthful exuberance today that I didn't have 7-8 months ago.
it's amazing, and you look great. So a few thousand people are each paying you a few $1,000s, and what do they want to know? What's going to happen in the world?
I think
Something small.
Look, so what do people want to know? You know, when it comes to what it is that I do, which is basically economics and financial strategy. So I spent my whole career doing this. You know, now I'm running my own company doing it 24/7, which is taking the economic data points globally and connecting those dots to then come up with a cogent and coherent message as to how people should be investing. So it's all about marrying the macro economy with the markets, the financial market. So people want to know, where's the currency markets going? Where's the dollar going? Where's gold going? Where's silver going? Where's oil going? Where's the stock market going? Within the stock market, should I be in value or growth? Should I be in technology or healthcare? You know, maybe both. So you're just trying to basically help guide the investment decision process, you know, with the skills that we have as market economists. And so that's what we do. And we do it in different forms. So, you know, there's different price points for different products and services. So we have, you know, we have a very basic service for people that are very cost conscious. We have a higher service for people that want.
A month?
Pardon me?
$5 a month for the cost conscious?
Yeah, well, don't forget, Mel, that I do have a payroll that I have to make every 2 weeks. So that'd be sort of tough to do at $5. But I think that you'll find that if you have to survey, which we do, our client base, they're more than happy with the service they're getting for the price that they're paying. So I think that anybody who is running a business certainly has the right to charge for it. The question is, if you stay in business and it's viable, the demand is there, then it certainly justifies itself. So, but you know, we have a very diverse group of investors, Mel. We have what's called the retail investor, which is the financial advisor, the retired professional, the individual, and we have a price point for them. And then we have institutions, and institutions typically want a higher level of service, both verbal and written. That obviously is a different price point because it takes more resources, but that includes the banks and the mutual funds and the hedge funds and the sovereign wealth funds and the family offices when you talk about institutions. So half our business is on the retail and individual side. That could include, you know, you or your friends who like to invest or maybe just want to know what's happening with the economy. And then the other half of the business is the institutional part. So it's a very diverse client base that we have, and we're in 40 countries. So you said before that that I'm in Toronto. I could do this business anywhere, and in fact, my goal ultimately is to do more of this in Tel Aviv if I can only get on a plane and come visit. But you can really do this because it's really about information and transmitting information. And look how we're transmitting information right now. Actually, the one thing about this pandemic is it's pushed me from a technological standpoint into a realm I've never been in before. I never even knew anything about Zoom. I didn't do Skyping. Of course, most of my presentations, I'd be in the ballroom of a hotel somewhere, speaking in front of 1,000 people. Now it's all done remotely. But you know what? I mean, it's nice to get the vibe from the crowd, but this is okay too. And so I've punched through my comfort zone on technology, working out of the home office right now.
And
But
you also,
my
well,
business,
I've also given you my nephew to help you out.
that's right. Well, he's also on the payroll. And what's interesting is that we're based in Toronto. A lot of people still think I'm actually American because of the 7 years I spent in New York working for Merrill. But only 15% of our clients are in Canada, and 70% are in the States. So if my math is correct here, 15% of our client base is spread between Asia, Europe, and Latin America. In fact, we have clients in Israel. We are in 40 countries. So, I mean, that's a real source of pride that although I'm in Toronto, we are not actually anything more than a domiciled Canadian company because our outlook is global in nature, because investments are global in nature.
Okay,
It's
so Dave,
encouraging that our client base is also very globally diversified too.
I'm extremely I'm blown away by your success, and we've been talking about going out on your own for many years. So I'm delighted that you're doing it. I'm now also going out on my own, but not because I planned it, but because I got fired. Which brings me to the next point. Why did you have to go and call yourself Rosenberg Research? What am I going to call myself now? Hey, I was Rosenberg Research.
You're
Now
gonna
you
call.
go.
You're gonna.
I'll call myself Mel Rosenberg Research.
I think that you're gonna call your. It's gonna be Mel's Marvels.
Okay. So, David, I need you to be my stellar advisor now into how to transform yourself as you've done. But I want to ask you several questions. You are famous for predicting how do you say debacle, tobacco in 2008. There's a word in English, debacle, the crash of 2008.
The crisis.
The crisis. You were one of the seniorest people in the world who predicted it. But you didn't predict the coronavirus. Could anybody have predicted the coronavirus?
Well, I guess Bill Gates did.
He didn't say when. So this is, I just, before we talk about life, there's one thing I want to understand, because I've always left the economics and the money to you. I really don't understand anything about it. But the Dow Jones, for somebody like me, appears to be very high right now. It's almost 28,000 or something.
Well, it's actually getting just about close to that level. So just 27,976.
Okay, so for somebody like me who doesn't understand anything, it doesn't make any sense. I mean, the world's in a terrible crisis, and the Dow Jones is almost back up to where it was.
Well, are you asking for a commentary on?
I want to explain to you what I don't understand, then you'll answer, okay?
Okay.
So whenever somebody sells a blue chip stock, let's say I have, I don't know, a blue chip stock, right? and I don't even know what that is, and I sell it for $34. Okay, so somebody is telling me that I should be selling it for $34, but somewhere else in the world, there's somebody else who thinks it's a steal to buy it for $34. And it can go down or up afterwards, but only one person is going to be right. And sometimes they're both mavens.
Mm-hmm.
Help me.
Well, it doesn't have to just be the stock market. It could be a commodity. It could be your house. It's just like you're talking to me about a price, and the price will always be set by the interaction of these two curves called supply and demand. If you don't have supply and demand, you can't forecast a price. So the reality is that the demand. So you have this. You bought this stock for $34. All of a sudden, you got people knocking on your door saying, "I want to buy it off you for 35." Now you might not sell at 35. Maybe you'll say, "Oh, well, if it's gone to 35, how about 36?" So it's a little bit like an auction, right? You've seen auctions. You've been to an auction, and so everything is basically an auction. In this sense, it's as a silent auction. You don't always know who's on the other side of the trade, but it's just basically logic that if you have more buyers than sellers at the existing price, the next price move is going to be up. And then if you have more sellers than buyers, the price is going to go down. And that's basically, we could debate as to whether or not it makes sense. It's not about making sense. It's about, are you comfortable buying this Rembrandt for $2 million at a Christie's auction? As maybe somebody who's got a particular preference for it might want to buy it at some unbelievable price that maybe you don't want to buy it. And it's no different than a stock. So everybody's got their own preference. Everybody's got their own price point. I don't think I'd want to buy the stock market. Let me just finish. I don't think I wouldn't want to buy the stock market at a 24 price earnings multiple. But somebody who's very bullish on the economic outlook, and if you think interest rates are going to be at zero forever, well, you know what? I think I want to buy it at this level. So it's just look, we're all different. We have different lens. We have different views, and that's what makes things exciting. And right now, the price action in the market is telling you there's more bulls than there are bears. There's more demand than there is supply right now. And we could find out in a week or two that it's tipped the other way. But right now, that's what the markets are telling you.
Okay,
more buyers than sellers.
So what you tell your customers, is you give them all the advice. You say, here, this is the interest rates, and this is what's happening in the world. And, millions of people are getting coronavirus. And logic will tell you to sell your stocks. But that's only logic. There's also, I don't know, God, illogic.
Well, look, Mel, there's some companies that have actually done very well with the pandemic. And so I think that what's happened is it's created a new sort of economy called the stay-at-home economy, or what I call the homebody economy. So there's companies that are called, say, growth or defensive growth that have done very well. Technology companies that have become utilities. I've been saying for a while, like, you don't have to buy the entire stock market. You could buy the stocks that make sense. And I was saying for a while that what you want to focus on, especially because the economies around the world are only being supported by government stimulus. And it's not stimulus like going out and building infrastructure. It's actually writing checks to give people money who are out of work or have been forced out of work by the lockdowns. And what are those people going to buy with their money? Like, I don't think you're going to take a stimulus check and go buy a car or go buy a mansion or go buy a diamond ring. But you are going to buy essentials. What the government's trying to do is to try and preserve social stability and keep you whole. So I was saying all along, buy what you need, not what you want. Okay, so invest as you're living. Okay, are people running out to the airports right now to go fly on planes? Are people flocking to the hotels and the casinos? Are people going out and buying fur coats and diamond rings? No, 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 no. People are just basically trying to survive. So I've been saying maybe you want to focus on real estate, on the REITs. People will want to pay their rent so they don't get evicted. Maybe you want to buy the utilities. You know, the thing about utilities and REITs or these real estate stocks is they pay a 3.5% dividend yield. Well, in an environment where income is scarce and interest rates are close to zero, I would want to take, I'd love to buy those dividend stocks. And of course, you know, a lot of these other high flyers, I was there saying earlier that, boy, the valuations are super high for a lot of these stocks. Um, but maybe it makes sense. Maybe they've all been re-rated as utilities. You know, maybe Microsoft and Google and look at Amazon. They've all been re-rated. Home delivery services, anything with an online service presence, has been re-rated as a utility, as something they actually need. So I'd say that beneath the veneer, like you don't have to go there and buy the market. You can buy the 20 or 30% of the market that makes sense, because you could buy ETFs or you can buy the sector indices. You could just go out and buy individual stocks like all these people are doing on their Robinhood accounts. But you don't have to buy the market. You can buy as much of the market as you want. You can buy individual stocks and you can buy what makes sense.
So David, you're telling people what makes sense. That's your job. You are giving the best professional advice here. This is what makes sense today. And I think that's terrific. In a world where so much, bullshit, at least you're doing something real. Things might happen, but you're basing your advice on real data.
It's real data, Mel, but it's also, look, it's like you're going to take 10 economists and put them in a room and ask them a question, and this is the old joke, and you're going to get 10 different answers. Yeah. Maybe you'll get 11 different answers, but you're going to get a lot of different answers, and people will always say, well, you have the same data. How do you come up with 10 different conclusions? And it's because of how are you interpreting the data? You spent so many of your years inside of a lab and looking at cells, and in some ways, the economist is also in a laboratory. I mean, it's not a hard science, which is where you spent your formative years, but it's the social science. So it's about interpretation. You had to interpret data when you were in the lab at University of Tel Aviv, and I have to interpret the data too. And so do my counterparts and other friends of mine on Bay Street and Wall Street. So our interpretation of what the data mean. And you always have to have assumptions. And inevitably, your assumptions drive your conclusions. So I think that's really what the big difference is your assumptions. Whether or not you think a particular pattern is different this time in quotes, or whether or not it's following some existing orthodoxy from previous relationships, that comes down to a judgment call. Is it different this time? Have we seen a secular break this time? Or is it just basically just the same old cycle? I basically said that we had a real secular break in the data after the great financial crisis back in 08 and 09. And that we've also had a new secular break in the data. I think that what this pandemic is going to do, and I think we have to, I'm not talking about what are the markets doing now? What are they going to do in the following week? I think we have to make some assumptions. So my assumption is that we'll probably get a vaccine. If we don't get a vaccine, we'll probably get herd immunity. I'm not going to try and time it. We know that this is not the first pandemic of this scale. 1918, 1919 Spanish flu. And it just so happens there's a pandemic every 100 years. Go figure that. So we were spoiled in some sense. We haven't seen something like this. And you can't compare this to even the Hong Kong flu or H1N1 or Ebola. This is really a repeat of something like the Spanish flu. They never found a vaccine for the Spanish flu. They didn't.
40 million people died.
Well, yeah, and look at him, and it's and that's what's happening this time around as well. And so, the deaths, the virus count. I mean, I think that obviously this continues. What I'm saying is that there will be a point where this too shall pass, and I'm not trying to be glib about it, but we've had, 15 pandemics in the past 15 centuries, and I don't know if it's going to be a year or 2 years. What I'm saying is that no matter what happens, the way that we conduct ourselves and in our personal lives and in our commercial lives is going through a fundamental long-term shift. How we approach hygiene, how we approach, like, for example, I believe that we're in a new secular theme of working at home, and that's going to create a whole bunch of winners and losers. I think there's going to be a secular shift in how we travel, and that's going to create winners and losers.
And this is like
And I think how people approach their balance sheets and their savings. What amazes me, looking at the U.S. data, was that we went into this crisis with over half of the American public did not have enough savings, enough liquidity, cash, coins in the piggy bank to get through 3 months of a crisis. And I can't believe that. I mean, apparently, according to Donald Trump, best economy of all time, 3.5% unemployment rate. It was like, really, best economy of all time, and yet over half the population didn't have enough liquidity to get through 3 months of a lockdown. So then we have to blow our brains out on fiscal policy. And I think that people are going to come out of this with a realization that we have to basically save more. Nothing wrong with that. Living within your means, what's wrong with that? Except GDP is about aggregate demand. And if people are going to spend more out of their income, or I should say spend less and save more out of their income, it's going to have an impact on economic growth. It's going to have an impact on inflation. It's going to mean that interest rates stay close to zero for a long period of time. That could mean, because we talked about, you asked before, how is the stock market so high? Stock market is so high because interest rates are close to zero. That's why people are saying, well, I'm not making any money in bonds, I'm not making money in the bank account, I'll just go into the stock market. And I said before, there's some stocks that pay a very attractive dividend. They give you a 3 to 4% dividend yield. Okay, that's pretty good. So that sort of thematic is going to be with us for a long period of time. So I think that that there's some real secular shifts that are going to be taking place, and a lot of it will be much greater appreciation of savings in society, and a more focus on balance sheet quality. And I think that there's going to be some pervasive shifts in, of course, how we approach work. I think that you're going to find, before the pandemic, maybe 10% of the workforce worked from home. I think that number is going to be closer to 40 or 50%. I think that you're going to find, for example, more secular shifts. Like, I'm not sure what this is like in Israel, but in Canada, you have your choice between renting or homeowning. And what you found was that the renters really had it rough, especially if you were renting. You're on the 30th floor of a high rise with no balcony. Because the one thing that we came out a greater appreciation in this pandemic and this lockdown is a greater appreciation for space. And so what we're finding is that there's going to be a big shift away from multifamily housing, from condominiums, from apartments, to single family homes, affordable single family homes like bungalows. So you're going to find, once again, this is always about, in my profession, identifying who are the winners, who are the losers, because you want to invest with the winners, and you don't want to invest with the losers. So it means that the home builders are going to do quite well, and it means that the condominium developers and the apartment landlords are going to have a tougher time.
So that means that Toronto is going to grow all the way to Hudson Bay.
That's
David, this happened to me, like I'm practically locked down. I'm also in the process of losing my job. So I'm spending a lot of time at home, and it's wonderful. it's wonderful working from home. It's not a burden. It's a passion now. But I want to. We've been talking about the future and the present, and I love your quote of Yogi Berra about the future, and I can't remember it. What did he say? You remember?
Um, yeah, what was that? Was a
He
uh,
said,
predictions are very difficult to make, especially when they pertain to the future.
exactly. So let's now talk a little bit about life. You've had a remarkable career. I mean, totally remarkable. You grew up in a lower middle class family, fourth kid, practically ignored as a youngster. And if I look at the where you started off, as little brother Dave, and what you've grown to, I don't know anybody like you in the world. And people don't realize this about you. They say, I met somebody once at a meeting, and he found out that you are my brother. And then he was like, my best friend. Can you connect me with your brother? Can you connect me with David? And that's when I realized, above all things, more than reading your articles in Newsweek and Time Magazine and Wall Street Journal, that you have become an international force to be reckoned with. But as a kid, you were just a little David wandering around the house. So how do you solve this dichotomy in your own mind?
Well, it's hard to really dig deep into those years in Ottawa, and then extrapolate to the future. I mean, I don't want to compare myself to Beethoven, but wasn't he deaf? And
only when he was old.
And okay, and Albert Einstein, from what I understand, as an elementary and high school student, was actually pretty average. So I guess it's just the stages. I think it's just basically the stages of life. I don't think I'm not. This is not a rags to riches story, but there is the term rags to riches, and it's just basically not. It's a glib remark, because you should never really extrapolate your early years to what ultimately you're going to become in your professional life. In my personal life, I don't, I mean, has my personality gone through a profound change since I was a kid? I mean, we all mature over time, and we're the sum of all our experiences. But I really don't think. I think I'm this in my heart and in my soul, and I have a big kid inside of me too. I know that we all do, but I'm still that same kid that you knew and loved, back in the old Ottawa days. So
Stop loving you.
I guess I'm not trying to play the role of clinical psychologist here,
I was
except to
going
say,
to ask you this question, okay? What does little David say? We all have. I have a little Mel. You have a little David. But your little David was a kid that nobody expected anything from.
well, I don't pay attention to. I mean, I block out the accolades, and I block out. I mean, look, when you talked about famous before, look, I'm not Tom Hanks. I'm
David,
well known.
You're after Julius and Ethel Rosenberg. You're today the most famous Rosenberg. Trust me.
Well,
people can Google now, write Rosenberg, look at images and see whose face comes up.
Right. Well, look, I'm just. I mean, I'm also a spy, but I'm a spy trying to find conclusions to what's happening in the economy and the markets.
People we're not related to Julius and Ethel.
But look, Mel. I want to go back to what you were saying before. So about the little me is I block out a lot of the rhetoric. Look, if you ever went on if you go on my Twitter account, or you go onto my LinkedIn account, you'll see that I have a lot of detractors too. You have to block out the criticisms unless they're legitimate. I'm talking about really the insults. And if you're going to be in the limelight like I am, you have to take the good with the bad. I block out the bad, I block out the good. I just try and forge ahead. So I never let all the praise and the compliments, and if you want to call it fame or notoriety, um, I've never really let that affect me one way or the other. I've always done my best, and maybe this is where it comes down to how we were brought up. I always did my best to leave the ego at the door. And I think actually I've done a pretty good job doing that. Um, I think, firstly, when you're talking about being a kid and growing up, you're not thinking about your career. It really comes down to, as a kid, were you a kind person? And as an adult, are you a kind person? So that's what's important, is there kindness in your heart as a person? And then you're talking about the professional success that I had, which had really not a whole lot to do with Hillel Academy or Hillcrest High School. I mean, look, you can say we were lower middle class, but we were never starving in that Rosenberg kitchen. There was never like, where's the next meal coming from? Um, so, and we were loved, and that's a big part of like getting the building blocks. And education was always so big in our family. So those are the building blocks. But I surrounded myself in my professional career with great mentors. I was a sponge for information. I was curious. But when push comes to shove, there's EQ and there's IQ. And I know that, out of all the four Rosenberg kids, I was certainly the least scholastically inclined. I'd be more playing hockey in the local rink and skipping class. And out of all the four Rosenberg kids, my marks were not up to snuff. I would say I was an average, maybe a bit above average student, no better than that. People actually refused to believe that. But they didn't know me as a kid, and not everybody is scholastically inclined. Now, I did graduate with my master's in economics from University of Toronto, so it's not like I couldn't do schoolwork. But to be perfectly blunt, school was never my strong point. And you'll find with a lot of successful people, school wasn't necessarily their strong point. I think that I'm trying to think back. Did Steve Jobs have a university education? I don't think that he did. So it's not necessary or sufficient condition really for anything except to say that you know how to study. That's what school. You know how to study. You know how to take notes. In some cases, you just know how to do repetition because so much of school is about repetition. But I surrounded myself unknowingly with some great mentors. I had some great teachers. I did not have great teachers growing up in school. Okay, I didn't have my first great inspiring teacher until I was 15 years old at Hillcrest High School, who taught me English. But I had great mentors, and I learned at an early age uh, that there's IQ and there's EQ. And I learned at an early age, I'm talking about my professional career, the importance of EQ. That actually EQ will probably guarantee you more of a successful career than IQ will. And that comes down to what? It comes down to multitasking, comes down to being diligent, hardworking, responsible. Don't hide from your mistakes, learn from your mistakes, have your boss's back at all time. Okay, so it's about trust, it's about character, it's about reliability, it's about dependability, it's about meeting deadlines, it's about working your ass off. And it's always about trust and dependability because you're always going to have a boss. And even though I said before, I don't have a boss right now, actually, I have 2,600 bosses. They're my clients. But trust is the most important thing. And so I think that that's what I built up when I built up that repository of goodwill over time. It wasn't just good calls. You mentioned a call I made 12 years ago, but there's a lot more that goes into being a great anything. And there's nothing more important than trust. And I think that that's what I built up over time. When you're
Indeed.
talking about how I managed to take this to a successful career.
So there's two things that come to my mind beyond education. And the first would be we were brought up to work hard. Not necessarily at school. I remember you mowing lawns and, summertime came and we worked. You know, we worked for $2 an hour, and you carried fruits in the market, and we grew up working hard. That's the first thing. So that is something that we learned as kids that I think beyond our education was really very important for both of us. You know, that whatever work you do, whether it's sweeping floors, mowing lawns, picking fruit, you do it with your whole heart. I think that's something we both learned. And the second thing um, is something that maybe we were born with, but especially you. You're an amazing storyteller. You know, you talk about EQ, but like I sit in your talks and you're hilarious. You know, you don't have to be an economist to get a huge kick out of your presentations. So if you ask me, this is part of your success. Is not only your ability to synthesize and to analyze and to see the big picture, but you are a great presenter.
Well, I don't think I'm not sure that that comes naturally to everybody. But like I said, I surrounded myself with some great mentors, and I asked lots of questions. I took lots of notes as a youngster, and of course, I've got my own style and my own personality. But I could see what worked and what didn't work. I actually remember the first speech that I ever gave. I was at the Bank of Nova Scotia. I was the intermediate economist. I just been hired there. This is like in 1988, and I was asked to give a speech. The chief economist was supposed to give it. He gave it to me, and it was at the Christmas party at some club in northern Toronto. And I wrote out my speech. I wrote it out, and it was at like the Holiday Inn Hotel, and it was like the Kiwanis Club of North Bay or something like that. And I got up to the stage, and I had reams of handwritten notes. And I'm there like a robot. We at the Bank of Nova Scotia believe that in 1989, real GDP growth shall average 3.25%. That shall be moderately better than the 2.85% growth we experienced the year before. And I read my speech and read and read and read, read and read and read for 45 minutes. And all of a sudden, I'm in this ballroom at the Holiday Inn, and it's like Christmas time. You know, they're expecting there's going to be an erudite, interesting economist speaking for 20 minutes. I'm reading my speech, and it's like already in the 50th minute, and all of a sudden I look up, and people at the back, they open up the partition. I didn't know it was a partition that went into the another big ballroom, but it was all set up as a casino. It was all set up as a casino, and then people start going and they're playing blackjack, and they're on the roulette wheel, and there's maybe 4 or 5 people go, then 7, 8, then 12, and I'm still reading my speech. Let me now turn to the inflation outlook for 1989. Then I start noticing half the people have already left.
David, where are you? Please come back. I need to know the end of the story. David? Brother Dave? Okay, well, this is the first time this has happened to me. So David just demonstrated his storytelling ability, and I'm going to have to bring him on another time to finish this story because David, you're frozen in time. But for the first 43 minutes, this has been a wonderful talk with my wonderful baby brother, David Rosenberg, who has really conquered the world. So thank you, everybody. Have a wonderful weekend. And you've got Mel on Sunday.